So, if the federal government lowered the interest rates to help out the economy, let's see exactly how this might possibly affect you. Now, credit cards are typically lowered. That means that the interest rates for the return actually is lower. So, in theory, you could potentially buy more products and roll over your bill to next month without accruing more money for interest. That being said, though, it's a dangerous game. Yes, technically you have a little more leeway when it comes to repaying your bill, but you don't want to get into that habit of accruing this debt, as it does roll over a lot, and those interest rates are still astronomical whether or not they're lowered or not. Keep in mind that this might give you some wiggle room, but don't think of it as all. Just don't be cognizant of the idea that you have an ability to pay back these at a later date and a later time, as it might throw you further into debt if you already are in a credit card debt. Your auto loans might actually be cheaper. If you're planning on buying a car or leasing a car, now might be the time to do so. You can lock in a good rate if the interest rates are lowered, and you'll be able to pay that off a lot quicker, or those payments will be a lot lower than what you have locked in earlier. Your savings accounts might be affected as well. The lower the amount of money that you might be able to make on a savings account that does have an interest rate. Now, of course, these interest rates are usually fairly low. You're not going to be rolling over hundreds of dollars depending on the amount you have in there, but something to pay attention to for sure, as you might want to look at other banks that have favorable rates if they're all lowered at the same time.